Non-banking financial companies, NBFCs, in India are expected to witness moderate growth in assets under management, AUM, over the next 2 fiscal years, projected at 15 to 17%, according to CRISIL ratings. This slowdown comes amidst a heightened regulatory environment and a decline in GDP growth. In FY24, India's GDP grew by 8.2%, while NBFC AUM surged by 23%. However, with economic activity decelerating, AUM growth is expected to taper. Krishnan Seetharman, Chief Ratings Officer at CRISIL, highlights the link between slowing credit growth and economic headwinds. Additionally, India's GDP growth slipped to 5.4% in the second quarter, down from 6.7% in the previous quarter, falling below economists' forecasts of 6.5% and the Reserve Bank of India's projection of 7%. Key segments like unsecured loans and microfinance, contributing 23% of AUM, could face the most impact. Despite a moderation in NBFC credit growth, projections remain above the decadal average of 14%, supported by strong fundamentals. However, rising household indebtedness and asset quality risks could challenge segments like microfinance and unsecured loans, which constitute 23% of the sector's total assets under management. Home and vehicle loans, the two largest traditional segments, are expected to maintain steady growth, driven by robust fundamentals. Yet, regulatory pronouncements emphasize the importance of compliance and operational risk management, as highlighted by Krishnan Seetharman. Unsecured lending, which saw rapid growth at a CAGR of 45% over the past 3 fiscals, has become the third largest AUM contributor. However, its growth pace is anticipated to slow to 15 to 16% in the current and upcoming fiscal years, reflecting tightening economic conditions. Let's analyze the technicals of SBFC. The stock is currently trading near 85 rupees and 91 paise, showing a consolidation phase within the range of 79 rupees and 45 paise as support and 95 rupees and 57 paise as resistance. This range-bound movement indicates indecision among traders, with neither bulls nor bears gaining control. The support level of 79 rupees and 45 paise has been tested multiple times, proving to be a strong demand zone where buyers step in. On the upside, 95 rupees and 57 paise acts as a significant resistance, capping the stock's upward momentum. Recent volumes appear subdued, suggesting limited participation. For a breakout, we need to see increased volumes alongside a close above 95 rupees and 57 paise, potentially indicating bullish momentum. Conversely, a breakdown below 79 rupees and 45 paise could lead to further downside. Traders should watch these levels closely and align strategies with market cues. Patience is key during such consolidation phases. Analyzing the technicals of 5-star business finance, the stock is trading near 638 rupees and 85 paise, after a sharp fall from the resistance zone at 826 rupees and 58 paise. Immediate support is seen at 677 rupees and 76 paise, but the breakdown below this level reflects bearish sentiment. If the stock fails to hold current levels, further downside may be expected. Investors should note the inherent risks in smaller NBFCs compared to larger players like Bajaj Finance or Cholamandalam Investment. These larger companies have diversified portfolios and robust risk management, providing stability even during economic downturns. Smaller NBFCs, however, may face heightened credit risk and liquidity issues. The collapse of DHFL is a stark reminder. Despite a promising start, poor asset quality and governance led to its downfall. This highlights the importance of due diligence when investing in smaller NBFCs, where risks can outweigh potential returns. Looking at the technicals of Home First Finance, the stock is trading at 1,074 rupees and 75 paise, recovering slightly after finding support near 999 rupees and 9 paise. This level has acted as a crucial pivot in the past, providing a solid base for the stock. On the higher side, the stock's recent peak was near 1,400 rupees, marking a significant high. Currently, the stock is trading at a discount of approximately 23% from its all-time high. Such corrections can often be healthy, providing opportunities for investors to enter at lower levels. However, this discount also highlights the importance of assessing broader market sentiment and company fundamentals. For a bullish reversal, the stock needs to reclaim the 1,200 rupee zone decisively. Until then, traders should remain cautious and monitor the 999 rupee support level for any signs of weakness that might lead to further downside pressure. Hindustan Unilever Limited, HUL, is betting big on innovation and premiumization to drive growth. At its recent Capital Markets Day, the company outlined its strategy to strengthen key brands, expand its premium product portfolio, and leverage digital channels. Management aims to achieve double-digit earnings growth over the medium term by focusing on affluent Indian consumers. Goldman Sachs has maintained a neutral rating for HUL with a target price of 2,775 rupees. While the brokerage appreciates HUL's long-term initiatives, such as transitioning from powders to liquids in home care and expanding premium beauty and nutrition segments, it highlights near-term challenges. Rising input costs and tepid urban demand could slow the material impact of these efforts. At 2,460 rupees and 55 paise per share, HUL offers an interesting mix of long-term potential and near-term hurdles. Investors should weigh these factors before deciding on their next move. Hindustan Unilever, HUL, has been a consistent performer over the years, as seen in this long-term uptrend. The stock is currently trading at 2,472 rupees and 20 paise, holding above its multi-year trendline support, which reflects strong investor confidence in its fundamentals. However, the recent pullback from its peak near 3,000 rupees indicates limited upside momentum in the short term. As one of India's largest FMCG companies, HUL's scale brings stability but also imposes growth limitations. Expanding further in an already saturated market can be challenging. Moreover, its massive portfolio of SKUs, while catering to diverse consumer needs, impacts operational efficiency and compresses margins due to higher costs. Investors should consider these structural challenges, along with the stock's technical resilience, before making decisions. While HUL remains a long-term compounder, near-term growth may face headwinds from market saturation and cost pressures. Varun Beverages, VBL, has shown a stellar performance in recent years, with its stock price climbing significantly. Currently trading around 608 rupees and 90 paise, the stock has found strong support at 549 rupees and 97 paise, while resistance at 671 rupees is capping further upside. This range-bound movement suggests consolidation after its sharp rally earlier. The company's past growth was driven by key launches, including the introduction of Sting energy drinks, which significantly boosted sales and margins. However, as the company grows larger, replicating such explosive growth may become challenging. The law of large numbers implies that scaling further requires disproportionate effort and innovation. While VBL remains a strong player in the beverage sector, investors should moderate their expectations of future returns, especially as the impact of past catalysts like Sting normalize. Focus on long-term fundamentals and watch for new growth drivers in the coming quarters. Please note, this video is for educational purposes only and should not be considered as financial advice or a recommendation to buy or sell any stocks. Always consult with a certified financial advisor before making any investment decisions.